The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Hello and welcome to The Trade. Well, before we get to the technicals, let's have a look at what traders are watching, with US private payrolls increasing a less than expected 54,000 jobs last month amid these easing labour market conditions. The number of Americans filing new applications for unemployment benefits increasing more than expected. Now, this is of course ahead of the key non-farm payrolls data tonight. The Trump administration has urged the Supreme Court to swiftly hear a bid to preserve President Trump's sweeping tariffs, which have been ruled illegal, with China imposing further tariffs of its own. It's applying tariffs of up to 78% on certain US optical fibre imports from September 4, which was, of course, yesterday, accusing American producers of skirting anti-dumping measures. Let's get across the currency technicals with Thomas Atkinson from FX Evolution, who joins me now. And Thomas, let's have a look in terms of what we've been seeing with some of the big name stocks. Of course, BHP had traded ex-div. What are you seeing there?
Yeah, well, thank you very much for having me on, as always. It's some interesting stuff happening in the markets. It's what we're seeing is a bit of rotation, and a lot of this is coming from actually the US and a weakness starting to appear a little bit in the momentum funds. So we've seen BHP, which I think we've got a chart for, start to find some strength about 2-3 months ago, back in that kind of July, June area. And we actually spoke about it, I believe, on the show, and we talked about the improving pricing there and the improving liquidity in the Chinese markets. Now, a lot of people don't realize, but of course, BHP is very linked to China. So if China's improving in terms of the stock market, often, and their economy is starting to pick up, then you often do see improvements in iron ore. So I've got a couple of charts here. The first one is the most traded zone, which sits around $39.60. This is going to be a really critical level should BHP drop a little bit after the div, after the earnings. And that is the zone that has seen the most trade on it over the last kind of year. So effectively, it's an area where big funds are buying and selling in mass quantity around that zone. So I like the charts on the iron ore at the moment. I think the improvement is there. We're seeing the same thing with the copper bottoming at the moment as well. And it's kind of like the catch-up trade. Lithium, iron ore, copper, some of the metals that haven't done so well in recent months have started to improve, which is good.
Well, let's get to the biggest stock, though, on the market, CBA. I mean, up, down, still holding pretty solidly. What are the technicals showing you, Thomas?
Yeah, technicals and fundamentals a little bit different on this one. So, look, the price is obviously high, and that's because they're pricing in forward changes to the businesses, especially in all the banks in the world. So it doesn't matter. I actually saw a chart the other day of Canadian top 5 banks all breaking out to a new all-time high. So obviously strength in the finance sector across the world is actually a good sign for markets. So I think that's good. The thing about CBA, though, is it may have run ahead of itself. So it went all the way up to those lofty heights at 190. It was getting charged at like 29 times forward earnings or something. It was pretty high. And then now it's pulled back down. But this has been in a steady, what we call lower high and lower low decrease since around July. And it's now hit the biggest trade area again, which is around that $167 mark. And that's a really critical level for traders and investors to be looking at. So we've seen some buying, it looks like, or some bid that's come in around this price. I'd like to see a little bit of strength here in CBA back up to around that $173 mark. And then the real test happens on top of that series of lower lows and lower highs. If we can get a higher high above 175 in the future, it could spell further gains on CBA. But for now, it's in a downtrend on the smaller timeframes, but it's hit what I would say is a critical support.
Is Woodside at a critical spot too, Thomas?
Yeah, I think so. It's again not been a great performer in recent in probably the recent 2 years. Obviously, we had inflation concerns. We saw a lot of oil stocks around the world do really well back in 21, 22, and then they didn't do so well, which is pretty typical. But some improvements recently. Another one of those downward trend lines broken above. We saw that in July. A lot of things happening in July, a lot of rotation. You'll notice bank, CBA was down, yet iron ore and commodities like this one were up. Then we've gone to make a new high, so breaking kind of the downward trend. And what I've highlighted here is the area between 24 and around 26. And on the charts, that's a good technical zone because, again, we've seen previous accumulation or at least some form of trade there by the biggest players on the markets. And this is an area I think a lot of traders and investors will be looking at in terms of reaction. So if we get back down to the 24.50s, $25 zone, I'd like to see a bid come in there. And I think traders will be very interested in this zone because if it does find buyers again, maybe it could go towards that $30 mark.
Thomas, let's look at the broader market. Not a great start to September, but we're up yesterday and up again today. But we had records breached in August and it was a really solid month. What are we seeing in terms of where we go next?
Yeah, so I think the thing is that when we're looking at the broader markets and again, the Australian market here, some records were hit, very strong return, of course, about 27% from the Liberation Day lows in America. And this has been driven by financials, of course, first. And then now we're starting to see a pickup in, of course, some of those metals. So we've seen rare earth mineral metals do amazingly well. That's been a real improvement for Australia. But recently we've had a couple of problems. We've obviously seen the CSL news. We've obviously seen a few healthcare pull downs and a few banks also dropping. I think that could be offset by hopefully an improved Chinese market dragging along commodities and particularly iron ore stocks, which we know make up a huge part of Australian markets. So I like this support level that we just hit. We've got a nice, strong weekly or daily close here above the 88 kind of 60 zone. I'd like to find it really going to come down from the US and the jobs numbers I think you were talking about before, but it's a good first bid.
All right, well,
so I'm hoping for more upside.
You mentioned those Chinese stocks. What are we seeing more broadly?
Yeah, it's all about liquidity. So the Chinese central banks and in general just banks around the world have been actually stealth kind of improving liquidity across the board. This one here is of course the US 500. Anyway, we'll get the other chart in a second. But the Chinese central bank has been basically pumping liquidity since about last year. We're actually on the show talking about it last year, and I was probably one of the only ones to really be very bullish on it. And it was nothing to do with the headlines. It was all to do with the actual liquidity and what the markets were telling you. So the great thing about charts, and for anybody that's out there viewing this and looking at the charts, you guys can see that the market will actually already be pricing or starting to move before necessarily everybody else starts to get a hold of it. So at the moment, HSI, which is the Hang Seng, has been improving. The main thing here is it's been making a series of higher highs and higher lows. The blue line is what we call a 50-day moving average, and that is a critical level for it. We're back to that. The only problem this time is that we've done it without making a new higher high. So it is starting to weaken, although it's been strong across the board. I think it's in consolidation. So for a lot of traders, the key will be a weekly close above around probably 25,400 to 500. And if that happens, it really could start to pull along again, iron ore stocks, China stocks, etc. But critical point here, currently in consolidation, I think traders will be looking for the next big move on this one.
All right, we'll bring back that S&P 500 chart that we briefly showed because that is the big momentum too. 65.02 is where we finished. Some very solid moves coming through.
Yeah, what we would probably call is a bit of a dull market, and this actually makes perfect sense. We've been talking about this being one of the fastest. A lot of people call it the most hated rally ever, but it's only because a lot of people have been trying to short it. In general, the market actually has done the third fastest recovery on record. It's been ramping up on semiconductors. That changed back in July, where we saw semiconductors start to go sideways and a rotation occur. So this is again in that line with what we've been talking about recently. Now, you can see here I've highlighted with four little kind of little yellow squiggles, the idea that the market is making higher highs, but it's doing so slowly. And this is what we call a dull market. And for most people out there, you're probably starting to get aware that September is the number one most volatile kind of market of the year month. So it's often considered a bearish month for markets, but at the same time, you cannot say that this market is showing bearish signs. It's dull. They often have a saying, don't short a dull market. And every time it sells off, people just jump into trying to short it and it finds a bid straight away. So I think it's a rotation market. We're seeing different things being picked up over the last 2 months.
Let's get into gold, Thomas. It has hit fresh record highs. A number of reasons why. We know that Goldman Sachs now saying potentially 5,000 US. What are the technicals showing us?
Yeah, I've been a big fan of gold. This one here, it's multiple years now. I still remain a fan, even though everybody's now on the bandwagon of 5, 7, all sorts of thousands of dollars. Look, the thing here is that it's been consolidating for a little while. And for viewers out there, the main thing that happened here is back in May, gold became the most traded or the most crowded trade. So effectively, everyone went bullish. And then when that happened, the market, of course, stayed sideways for a while. And it created what we call a pennant pattern, which is a kind of like coiling pattern that then acts like a spring and it comes out pretty aggressively. Now, that changed about a week ago, 2 weeks ago now, where it started to go bullish. And if gold is going to follow a pennant pattern, if it is, and this is just technical, so don't go into anything of it, it could be moving towards 4,000, 4,200. So that would be huge. And I think if you're just looking at it from a symmetrical triangle perspective, that's going to push around a 37.50 narrative. So look, Goldman, JP Morgan, a lot of people coming out now calling for big numbers. And this is more along that line of people losing faith in, I guess, what they would call fiat currencies and debt markets. And yeah, gold looks very bullish when you look at it on the charts.
And Thomas, does digital gold also look bullish?
Yeah, so then the other one is, of course, Bitcoin. So look, Bitcoin has been a little bit bearish recently. It's been coming down off its peaks, but there are some symptoms that have happened in previous cycles. So if you actually look at previous points in time for crypto, what they call halving events, at around this point in time, you often see what they call as a bear trap. And that is a market that shows signs of weakness in Bitcoin, but at the same time, some of the larger other coins, Ethereum, I guess nowadays Solana, XRP, these others, they actually hold. And that's exactly what's happening right now. Bitcoin is weaker than those. It is coming down to some critical levels. There are a couple of levels I put here on the charts, but I think zones to watch for momentum to potentially change the side, 113.5, 104 kind of area, and then of course a 98. And a lot of people are calling for a 98 or a 90. That would instigate around 20% down, which is traditionally what has happened in previous halving cycles. It doesn't mean it's over for Bitcoin though, but currently the daily trend is actually down. May change soon.
All right, Thomas, always appreciate your insights. Thanks for joining us. Have a great weekend. Thomas Atkinson from FX Evolution. That does it for this edition of The Trade. Be sure to join us next time.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.